Morning, everybody. Thank you for joining us again for this week's MERA, Middle East Restaurant Association, a webinar powered by GRIF, the Global Restaurant Investment Forum. I'm delighted to bring you a stellar lineup of CEOs this morning to discuss some really fascinating research, which has been done by Ali, the CEO of Mingora. Now, they're first going to talk you through the research and discuss it a little bit. This research represents over 1,000 outlets here in the UAE. And then we're going to move into a Q&A section. So Simon kindly has joined us again, editor of Caterer Middle East, and he'll be talking you through the Q&A. Please do, throughout the sessions, feel free to pop your questions down in the Q&A section down the bottom. And if you have any comments, you can pop those in chat. But if you have questions, Q&A is the best place to put them because it's easier for Simon to navigate through. So enjoy, everybody, and I'll pop back at the end to tell you a bit about what we have in store next week and some of the things that we've been up to as MERA. But now I will hand over to Simon.
Thank you, Jennifer. Yes, hello, and thanks everyone for joining us for the latest MERA webinar, which will today focus on the effects that COVID-19 has already had on the F&B industry in the Middle East, as well as discussing what we as an industry can do moving forward to improve our chances of riding this in. The catalyst for today's webinar was a survey done by restaurant performance company Mingora, which saw 30 CEOs representing around 1,000 outlets in the region give their views on the current situation. I'm delighted to be joined today by the Mingora CEO, Ali Mohammed Said, as well as 3 of the leaders who took part in the survey and who are here to share their expertise and knowledge. They are Andy Holman, CEO of Eathos, Mert Askin, F&B President of Azadea Group, and Tapan Vaidya, CEO of PJP Investments Group. I'm sure most of you know them already and appreciate the wealth of experience that they will bring to the discussion. Now, so for today's session, Ali will walk us through each section of the Mingora survey with input from the rest of the panelists to give you a deeper understanding of the current situation. And then we will open the floor to questions once they are finished. So please, if there's anything you would like to ask, anything you want more clarity on from the presentation, or any advice you would like to solicit from our fantastic panel, please use the Q&A tab at the bottom. I will keep an eye on that as we go through, and we'll get as much packed into the Q&A section later on as we can. But for now, let me hand over to Ali and the panel for the presentation.
Thank you, Simon. Good morning, everyone. First of all, I hope you're all healthy and safe, and also advance Ramadan Kareem to everyone as well. Now, right, we're going to dive straight into the survey. There are 10 questions in all. We divided it into 7 themes, or what you could call 7 sections. I'm going to walk through section by section, and at the end of each section, I'm going to ask our panelists to give their interpretation of the findings, and more importantly, what did they learn in the last few weeks during the pandemic, what has worked for them, and what has not worked for them. We'll try to keep the session to around 30 to 35 minutes on the survey itself. And then I'll hand it over back to Simon, who can then take your questions and pose it to the panelists. So we'll start with the parameters of the survey. Let me share my screen first. Panelists, can you see my screen? Okay, great. So the parameters of the survey are very simple. It's a UAE-based survey. We covered 30 respondents in all. All of them are decision makers, CEOs or COOs of the business. We covered franchisees and franchisors, both sides. And I should also mention independents and entrepreneurs. Industry-leading chains, fast food, fast casual, casual dining, and fine dining. So we covered the gamut of the industry. Approximate number of stores were over 1,000, so it's a pretty representative set of CEOs who answered. We covered the time period March 30th to April 1, so about 3 weeks ago, which will also be very interesting to note how things have moved since the 3 weeks ago when we did the survey. 10 questions in total, as I said. So I'm going to start off and dive into the first section, which is growth and investment. The question was, what were you looking at growth in 2020 prior to pandemic, and what is it now? And on investment, did you have investment plans prior to COVID-19? What were they looking like, and where are you today? So the question we asked was your perspective on full year 2020 results prior to COVID-19 versus now. On the left-hand side, you will see the results prior to COVID-19, and on the right side, during COVID-19, what are the CEOs thinking? And as you can see, the industry was in moderate growth. CEOs expected, keep in mind, this is full year 2020, how they were looking at 2020 for the full year, not at the moment what their growth was. So they saw 2020 as a moderate growth year. 64% of the CEOs said their businesses were going to end up with moderate growth. There was no business which was going to be in significant decline. There were 13% of the businesses that CEOs that said that their businesses would be in significant growth. Now, 90% of the businesses post-COVID-19 feel like they're going to be in significant decline. So very, very strong impact of COVID-19 on the industry, which is no surprise. The second question we asked were about investment plans. Like, what were your investment plans prior to what they are now? So we gave them a scale of 0 to 100, 0 being significantly less investment or no investment at all, versus significantly high investment at 100. And as you can see in the results, each bar is a number that is given by the CEO. So as you can see, 52 is the highest that we got, but the average score was 16, which means the whole industry is going to significantly curtail their investment plans this year compared to what they were before. One more point I would like to add is that Mingora does another product called Sales Track, where all the major chains in UAE and Saudi Arabia contribute their actual data, and they get weekly reports telling them where they are versus where the industry is. We started that research in 2018, and I was going through the numbers in 2018 as well, 2018 and 2019. And in 2018, the industry was down 4.5%. 2019, the industry was down 1%, and 2020 is looking like significant decline as well. So I'm going to ask my first question of Andy and then Mert. Given that this year is going to be a significant decline year, and you know restaurant margins are thin as well to begin with, and industry did not enter the year on a good note, and previous years have been down as well. What do you say to your mindset as a business and that of your investors in terms of how you see restaurants as an investment vehicle for UAE businesses? Andy.
Hi, good morning, Ali, and morning, everybody. Appreciate getting the opportunity to put a point of view. So I think the obvious reality right now is all businesses are focused on one thing, which is preserving their cash reserves in a way that can sort of underpin the health of the business as long as possible. So the second part would be that as we look at the balance of the year, I think it's clear to us that the focus is on a domestic environment, meaning that until the skies open and Dubai can once again start to welcome the transit population who support us, we're going to have to just be focused on looking after the people that are here. I think that no surprise that at an investment actually committing more capital towards future projects, at this point there's little appetite for that because those projects are unlikely to be able to generate anything looking like the return model that we would normally expect. So I think the expectations on our investors would be do what you can right now to manage the situation, and let's take a kind of a pause, hit the pause button on future investments. To the second part of your question is how do the investors consider the future investments? That's a little bit up for we'll have to see. A little bit of crystal ball gazing suggests that the nature of restaurant development has not just changed in the recent last few months, but has been in a state of change for some time. Obviously, the transition from purely dine-in through to a more off-premise focused, the ability to handle off-premise, delivery and takeaway offers. I think all restaurateurs are considering that. So with a little bit of crystal ball gazing, we suspect that as people are putting money into bricks and mortar assets, if that's what they continue to do, they'll be built with a slightly different approach, probably with a more flexible back of house format, so that in addition to the one the one part of the brand proposition that is most key to that, that they would also be able to fulfill other virtual or other concepts out of the same facility. So that I think is probably one change that will come. And other than that, I think investment would probably be equally considered along some of those new the dark kitchen or the virtual kitchen operators that at this stage seem to be an appropriate consideration.
Got it. Mert.
Thank you, Ali. And thank you for the opportunity to contribute. Without repeating too much what Andy has said, and I obviously agree with all of that, I believe the dynamics we are seeing are global and continue to have an impact everywhere, not only UAE. And just to give perspective, our business, which is composed of several brands across many countries, but with a big chunk in UAE, is down at around 80%. So we are trending of 80% or minus of what we were doing last year. So this puts a lot of pressure on the whole operation, on the longevity of the operation. So it's a cash management situation, and limiting investments is part of the game. And obviously we have also reconsidered all new investments, and we kept only a few investments in the pipeline. Coming to the other part of the question, UAE is one of the countries that we see intense competitive environment, and this is not new, and it had already become a red ocean, if I can tell it like that, and growth is more difficult compared to other markets like Saudi and Egypt, where there is more room to be profitable. Nevertheless, I personally believe UAE still offers a significant space to operate with acceptable returns on investment if you have the right model. And going into the future, the right model discussion, I think, is going to be very important. What is the right model? What is the balance between dine in and dine out? And what kind of elements you can have around this space. I believe again, there is room to invest and make money in UAE and in the restaurant space, and we all need to be creative in how we're going to make that happen.
Thank you, Mert. The second area we're going to talk about is CEO focus areas. What are the CEOs focusing on? The question we asked was, name your top 5 focus areas during this pandemic, and we capped the answers at 5. And we gave a list of about 15 choices. And the top 5 that emerged were rent renegotiations, safety and hygiene, delivery, staff welfare, and supplier renegotiations. So it's very clear that of the top 5 areas, there's only one area, which is delivery, which is revenue generation. The others are either cash protection, or they are around staff or consumer trust. So I also asked, just out of interest, if anybody is going to increase their ad spends during this time to make use of the opportunity, and I got a big fat 0 out of it. So the question I have is to Tapan and to Mert. You picked these top 5 areas, roughly around the same top 5 areas about 3 to 4 weeks ago. Which of your bets have paid off? What could you have done different? And which has given you the most gains? So I'm going to hand it over to Tapan first and then to Mert. Tapan, you're muted.
Thank you, Ali. Thank you for having me here. See, when the situation started to unfold in the region, it wasn't easy to immediately identify focus areas. It wasn't as if we were caught unawares, because we were watching what was happening in China. And we were trying to identify how it could hurt us when it was unfolding in China. We were actually going to our suppliers, asking if they're going to be hurt with supplies of cardboard to box our products that we buy from. We never knew that the tsunami is actually heading everywhere in the world. So when that happened, and again, see, we have gone through various recessions in the history. We've read about the 1920s recession after the World War I. We know the state of ravaged economy after the Second World War. We've known the 1980s oil crisis. We've seen the dot-com bust of 2000. We all remember the subprime mortgage crisis of 2007 and how UAE actually went through that around 2008 and 9. But this is completely different. So, does it come anywhere close? No. So it was very clear once the problem hit home, the challenges immediately emerged. And we had to come up with our own focus areas. So what did we do first? We first focused on optimizing our revenues. Because what happened? Malls closed, so we had to get rid of all our mall locations. So from the remaining locations, we focused on delivering. And guess what? We lost half our locations and we were left with the other half. And so we had to optimize our revenue. That was our first focus. And I think we largely managed, but what can you do? Half locations are gone. The second focus was having optimized revenues, we had to optimize our manpower. You don't have half your locations. What do you do with the army of people you have? So it was very difficult, but we decided that our primary goal during COVID-19 would be no loss of job, because one day the business will return. However gradual that may be, we realize that business will return, and when it does, we want to be ready for it. So no loss of job was our main goal. With that in mind, we had to act fast, and we did. We split our restaurant teams in 2 batches. Each batch now works 14 days a month. All non-restaurant based employees, 50% salary cut. We had to do it. And I think we are navigating this just as we should. The third focus was obviously approaching all landlords and suppliers. And we'll talk about that later, but this really is my answer to our focus areas. Over to Mert.
Thank you, Tapan. I think it's a great intro to what I can contribute here. And Ali, again, thank you for organizing this kind of surveys and data so that we can, as an industry, have tangible results to look at rather than hearsay. For us, the top 3 priorities, it was clearly from the beginning, and this was something that has always been the case, is the safety and security of the people. So this is a non-negotiable and number 1. I think this is something we need to do anyways, and it concerns our team members and consumers. And although we have introduced intensified measures here, I wouldn't say there were dramatic amendments. And also it became quite clear early on that this was going to be a survival mode. I mean, it was clear that we are not going to make money in this period and probably for a long time. And we just need to survive to come at the other end when this is over. And we started looking at key expense areas, and our 2 top areas are rent and employee compensation. And we started negotiating with the landlords. This is an ongoing process, and obviously they are waiting for governments to put some framework there so that they can be supported as well. And it's an ongoing process. And when it comes to employees, echoing Tapan, our priority has been from the beginning as a guideline that we want to maintain all team members when we come out of this unforeseen situation. And we don't want to go into redundancies. We don't want to go into terminations. Of course, as long as we can, and that all depends on the magic question: how long will this last? Finally, our brands are mostly casual dining brands, and they are highly dependent on dine-in traffic. Several of them didn't even have delivery prior to the situation, so we had to be very fast, work with our franchise partners, because these are all franchise brands as well, come up with solutions that we can have this channel, not only to have some cash coming in, but also, and maybe as importantly, to stay relevant to the consumer. This is something very important for us, and that's why we continue to also communicate and allocate some budget on marketing, and be active in our link to that consumer. And I think we're learning and we're getting better there. Ali?
Right. Okay, I'm going to go on to the next section, which is stakeholder support. The CEO's job is quite lonely in the sense that they have to juggle so many stakeholders. There's the consumer, the investor, the banks, the aggregators, the suppliers, a lot of people, that landlords. So they really need to feel the support from some of the stakeholders so they can focus on the problem areas. So my question to them was, how well do you feel supported by the following partners during this pandemic? Please check only one box per row. So we gave a range of most unsupported to most unsupported. And the first section was around aggregators, banks, and investors. And as you can see, aggregators actually scored the lowest of all. Almost 80% of the CEOs said that they feel either somewhat unsupported or most unsupported. In the bottom right, you can see comment on that as well. But aggregators scored the worst of all of them. Banks did all right. A lot of them at that time hadn't gone to the banks, so it was a bit more positive. Investors was quite positive. I think there was quite a lot of support for businesses. 38% most supported, and 28% somewhat supported. But aggregators, not great. And similarly, landlords, not so good. 24% said somewhat unsupported, and 24% said most unsupported. So half the respondents said that they felt unsupported by the landlords. Suppliers did slightly better. 34% said somewhat supported, and a bit more on most supported. So in general, the big problem areas that came through were landlords and aggregators, and my questions are going to be around those two. You can read the comments at the bottom. We don't have, in the interest of time, I'm not going to go through the comments. I did censor some of the comments because there was a lot of unparliamentary language in it. My question is to Andy and Tapan. Now, I'm going to play the devil's advocate. We all know that aggregators are, they are nothing without restaurants. If there are no restaurants, there are no aggregators. So I get the emotive arguments. But we also know that aggregators are not making money. In fact, neither aggregators, even restaurants are not making as much money because of the aggregators. So why should the aggregators support restaurants when they're themselves not making money? And let's say you want them to support you. What levers or what leverage do you have on them really? So question first to Andy and then Tapan.
Hi, okay. I'm probably one of the minority in that I don't have a negative opinion of the aggregators. First, I think that we all have to accept that this is an unprecedented situation, and whether you're an operator or a supplier of some sort, we all live in an ecosystem that's stretching us to find ways to kind of survive. And I don't think that there's any upside to us considering that there has to be a zero-sum game. We get something and somebody loses. I think that's impractical. Specific to the aggregators, I think we all have to accept right now, if it wasn't for their ability to support us, we wouldn't have any business. So I mean, other than those, maybe companies who've got a certain amount of their own delivery fleet. So going to war at this point with somebody who's a support part of your business model doesn't strike me as being the the most sensible use of time. What I do think that there are options within the business model that could support both partners. It would be unacceptable for somebody to come to me as an operator and demand that I give up 50% of my my margin for no reason other than they want to take it. So I couldn't impose that on the aggregators. What I think we can do is a collective, firstly, move away from this kind of discount war that inevitably is happening in the platforms. So if there is a structural change to the relationship, that would be the first thing, right? I think that there's an opportunity for us to get to the point where margins are calculated on the net sale, not on the promotional gross sale. That definitely is something which would then allow consumers to see the real cost of what it is that we're doing. Because right now, this situation creates a false positive. Consumers are assuming that this is how everybody's making money, which is not the case. The second thing I think that we could do with, in partnership with the aggregators and maybe with the Department of Economy, is working on a differential pricing structure. Delivery is more expensive for us as operators than off-premise or even to some degree now dine-in. So allowing us to be able to have differential pricing is an obvious upside where I think both partners could benefit. So as far as landlords are concerned, I think again it was expressed earlier. You know, they're an essential part of our ability to operate. They also have their kind of responsibilities. Clearly, the opportunity to work with them on timing, I think, is the critical point here, where their demands on us are either unrealistic, because when you're getting zero revenue through your outlet, it's unrealistic to expect to be paid today. Everything ultimately is going to come down to being able to help, find the correct timing. And I would suggest that that's towards the point of recovery. Obviously that's our point of focus, is talking to the landlord and explaining how it is that we see the future, hoping that we'll get them to commit to that more than today.
Got it. Tapan?
Yes, so first, aggregators. Support from them? No, zero support, other than more frequent payments, but support, nothing. Now, I agree with Andy. Now, every party has a role to play, and everyone really should be looked after by everyone in today's unprecedented times. But aggregators need to realize, like you said earlier, there is a serious flaw in their business model. Without our product, their product, which is pure convenience for the consumer, just doesn't stand. The business will collapse if there were no product to deliver. So they need to recognize that. And I think operators also need to recognize that aggregators have a role to play, but then both parties should sit together and agree on some kind of cap on commission. When I hear of some restaurants paying as much as 35%, I mean, what kind of business are they running, and what kind of margins they actually enjoy having paid 35% commission to? So this is a serious topic, and something will give, because it can't go on the way it is going on currently. Landlords, on the other hand, they have been more receptive, and in fact, we have clear rent waivers from Nakheel, by Festival City, Souk Al Jami in Abu Dhabi, and in fact, we were surprised yesterday by Alain Mall, a 3-month waiver of rental. We have deferment from other big players like MAF and Enoch, and we are waiting for some waiver. But obviously, even for the landlords, it is not easy to simply waive. Those who have, they've done a great job, but it's not easy for them to waive. I'm sure they have loan commitments to banks. I think it's time that governmental bodies step in and along with banks create a situation where, first of all, deferments are agreed and then waiver as possible must come into play. Franchisor, let me talk about our franchisor. We have excellent relationship with them, and they have confirmed deferment of all royalties. And in fact, they're coming up with a plan for even waiver of some royalties. So I hope all principals also take such steps for all franchisees. Ali?
Okay, thank you. Okay, so now in the interest of time, I'm going to, because questions are lighting up, and aggregator is an issue where we've got like 5 million questions already. So what we're going to do is I'm going to ask only one leader per question, the questions, because I want to save as much time as possible for question and answer session at the end. So the next part is drastic actions. I'm going to ask Tapan his views on that. What drastic actions are CEOs taking now, then in April? So these in the immediate time, then what is going to happen in May and in June, so quarter 2? And then what are they going to do in the second half? Some are saying they'll reassess later, and some will not take action at all. So we are divided into themes. The first one was people actions. And we asked them about pay cuts, and we asked them about staff layoffs. In terms of drastic pay cuts, 17% said that they will take drastic pay cuts immediately, and 28% said in April. So basically almost half the people said they're going to take drastic pay cuts to begin with, immediately in the beginning of the lockdowns, because it was that impactful. And about 38% said they either reassess later or will not take any action at all. In terms of staff layoffs, the situation is slightly better. There were some, 31%, who said they would take action in now or in April. But then 62% said that they will either reassess later or will not take that action at all. So a bit of a bifurcation. We're already seeing in some companies layoffs happening, but there are some companies that are holding off to their people. In terms of partner actions, I asked who will you stop paying first, landlords, suppliers, and franchisors. And it looks like landlords is where everybody's head was at, that they're going to stop paying landlords immediately, like 60% said immediately, and April 7%. And only 3% said that they will not take any action on landlord at all. Suppliers did better. There were some suppliers some CEOs that said they will stop paying some suppliers in now and in April, but a lot of them said they'll either not take this action or will reassess later. And in terms of stop paying franchisors, most of the panelists were franchisors, and so 48% was non-applicable, but in general, franchisor actions did happen in now and in April, about 28%. We also asked about selling off assets or stop paying banks. And in general, this is not the area where CEOs were looking at. So Tapan, your viewpoints on these drastic actions. And one question I wanted to ask, which was, there are significant people actions involved, staff layoffs, pay cuts, and all that. Is it all a function of balance sheets of companies, or is it also a function of company values? So over to you.
Okay, so see, as unprecedented as current times are, and as similar the problem may seem across all operators within restaurant industries, each operator needs to make a careful decision based on their conditions. Media pundits readily compare status quo in different countries. Italy is in stage 3, India is in stage 2. That these stages are, but these stages are completely unique to conditions within those countries. I mean, in fact, China stage 1 and US stage 1, or chalk and cheese. So there is no one size fits all solution here. Each operator must look at his or her own business, his or her own problems, and decide the best possible action to mitigate risks. In our case, while Papa John's is an older brand, we are a new business, just a year old, but fighting fit in these times. And after a slightly battered March, we knew it was time for action. Our decisions of salary cut was taken on March 31st. implement the next day. Timely and decisive action can save a business. And I recommend that every business must do that now and not wait and see how further the situation deteriorates or improves. And finally, I think if a company must lay staff off, it is down to lack of revenues and margins. I don't know of any operator who would willingly want to lay staff off. Mert.
Got it. Thank you. Okay, on short and long-term outlook, I'm going to ask Andy this question. We asked, what do you see happening in the short term in Q2, and what do you see happening in the long term in second half, Q3 and Q4? And the statements we gave was all stores up and running at full capacity, full supply chain restored, all UAE sectors, economic activity back to normal, consumer demand back to normal, all international travel restored, all global economic activity back to normal. And it's very clear in the short term, 90% of the respondents said that none of the above, and only 10% of the respondents said that all stores will be up and running at full capacity. In the longer term, for the second half, there was a bit more optimism. 45% said full supply chain will be restored by that time. 34% said that all international travel will be restored. 28% each said that stores will be up and running and consumers' demand will be back to normal. And 17% said all other sectors in UAE will be back to normal as well. But here as well, 40% or 2/5 of the respondents said that things will not be back to normal in 2020. So my question is, looks like there is a significant degree of realism in terms of 2020 being very difficult to get back to normal. So Andy, so the question is, do you think there's outside help is needed? What kind of actions do you expect, particularly from the government? And is there anything happening on that front?
Firstly, I think, as I mentioned earlier, I think we have to resign ourselves to the fact that the focus is going to remain on the domestic consumers for the foreseeable future. As and when the skies open, I think we can expect people to be slow to kind of start to circulate again. There'll be a recovery of business. But whether or not the tourism and people will have, one, the appetite to start traveling again, or two, the money, the disposable income, given that everyone will have been through a substantial period of austerity, this is probably not going to be the case. I think the focus points when we are going into the domestic consumer, again, there'll be continued focus on value. I think you asked the question earlier in the mail, am I a glass half full or a glass half empty? I'm a glass half full. I think that inevitably all businesses that do survive this will look to find ways to innovate and to become relevant and to kind of go after their consumer. I mean, the critical points will remain. Great quality food. There's probably going to be a continued focus on off-premise for a substantial period of time. So that has to continually improve. Where we are opening restaurants again, clearly consumers are going to be feeling slightly different about how they engage. We'll have to be considerate towards all of the health considerations. We'll have to make sure that the restaurant layouts are adjusted in a way that make people feel comfortable. And as operators, we'll definitely get we'll rapidly adjust to that, hear what consumers say and respond. So I think that the overall sort of focus, if we do our job properly as operators, will be to find a way to meet the needs. The basics aren't going to change. I mean, I don't know what the number is, 7 million people in the Emirates. They're still going to be here, the residential population, and they're still going to want to eat 2-3 times a day. So I think that there's still that opportunity. We just have to think more kind of creatively and constructively as to what do we do to support consumers in that time. Government, honestly, I mean, I can only imagine what it must be like to be at the senior leadership of a country where you have, I mean, it's an impossibly complicated thing to do at a relatively SME business level. At a country level, my blessings to them. They've done a remarkable job so far, and I would hate to guess how they will address some of the requirements that we're all going to place on them. Clearly, Dubai relies a lot on its income from petrodollars, and that is another blow that they've been dealt. So we have to be sensitive and I think pragmatic that there isn't a completely endless supply of support that they can provide. So primarily the responsibility sits on us as operators, I think, to be creative and to listen to what customers want and adjust accordingly.
Great, thank you. I'm going to skip the next section and go to the future, and this is the last question I'm going to pose at Mert.
Ali, before you go there, can I just contribute
yes,
2 sentences to the earlier discussion on the outlook? I think it might be useful for the audience. What we see as when the recovery will start and how it will take at one point, which is we do not see any recovery starting before September. And we believe that it will take somewhere between 6 to 12 months after that to come back to prior COVID numbers. So it's a long process, and having a longer breath is really very important here. This will not go away within a month or 2. This is very important. And secondly, obviously, it is very important that we have regulatory support in a lot of topics. But I'd like to see us also talking as a community, and I think MERA is a great platform and already contributes to that, how we can collaborate jointly. Can we negotiate with suppliers? Can we use each other's resources, for example? Can we use each other's warehouses or delivery fleets? These are the things that I think we need to look internally, which is under our immediate control. Thank you, and sorry for the interruption.
No, not at all. Thank you. So the final section is to Mert, and basically you actually already touched on it. How's your business going to look like into the future? One of the things that clearly came out on a scale of 0 to 100, 0 being on digital, significantly less digital to significantly more digital, it looks like most businesses are going to become a lot more digital. As we're seeing in our business as well, there's a lot of insights work is now happening on digital. It's happening for other businesses as well, given that the consumers are already there. And then the other question we asked was on bounce back ability of the business, which is how do you see your business bouncing back from this pandemic? And we gave a scale again of 0 to 100. And as you can see, the response is smack in the middle, almost at 51%, with on the left-hand side is equal to almost the right-hand side. There's a lot of uncertainty in terms of if their businesses are going to bounce back strong or weak or whatever. So my question again, Mert, to you, and you alluded to it, was prior to the pandemic to now, is your business model going to dramatically change, or are you going to keep the core of your business the same and look to change a few of the things? I was listening to a webinar, and Patrick Chaloup was there in the KPMG seminar, and he said that they're going to look at, for example, their assets. Do they need really big assets for their products? But then there's assets, there's staffing, there is investments, there is portfolio, there's people. Are you going to relook at your business post the pandemic?
The short answer is yes. I think we have to look, and I think we've been seeing already a lot of dynamics playing into this even before the pandemic. I mean, casual dining spaces in the past used to have 250 seats, then 200 seats, then 150 seats, then 100 seats. So this is all shrinking anyway. So this is business as usual, if I can call it like that. I think there will be some changes. Some of them will be maybe temporary changes. Some of them will be permanent changes. I think that when we start reopening, most probably there will be, first of all, some social distancing limitations that are imposed for a while. So we need to be ready to have, layouts and, plans to be able to cope with that. I think contactless payments that has been the norm now is gonna be a permanent norm. I think we're gonna see less and less cash. I think consumers might be more receptive now to electronic menus and self-ordering, even at dine-in, which has been something we've been, talking about and pushing back and not liking and trying. I think this is something we need to maybe relook at if we can give the consumer the ability to self-order and self-checkout at dine-in. There might be some new accreditation requirements. I'm not sure about that at this stage, but because I believe this is not the last pandemic or situation we're gonna see. We might be seeing these kind of situations in the future, and this is an opportunity also to get ready for that. We might need new tools to monitor team member health and safety. I think this might be something permanent. But one thing I think that is always important and is going to be maybe even more important now, and this is one of our key pillars, is we need to be more and more focused going forward. We cannot just do everything and try everything. We need to learn from this to operate faster, make changes to our models more efficiently, how to use technology more, how to mitigate risks. It's crazy days, and thank you for giving me the last question, Ali.
No, thank you very much. That's all from me. Over to you, Simon, for the questions. Thank you, panelists.
Thank you, Ali. And yes, let me echo the thoughts of some of the audience who just said thank you so much for sharing that fantastic data with us, as well as the obviously expert opinions from our panelists. Firstly, quickly, I just want to say we have had a few questions about delivery aggregators, of course. That will actually be the full topic next week. So in the interest of time to try and get through some of the many other questions we've had today, and we'll try and leave them for next week where it will be the main focus. But let's just dive right into the questions that we have now, because there's lots of them and we only have less than 15 minutes, so let's get started. Now, Paul Greenwood, he asked a question about dark kitchens being on the rise, and basically, will we see a vast reduction in restaurants with production outsourced to them? Will there be an opportunity post the coronavirus to entice people back into our premises and keep them there? I know, Andy, you're experimenting with virtual brands. What's your opinion on that?
Well, yeah, I think that the rise of dark kitchens or virtual kitchens, whatever you want to call them, will continue to develop, and whether or not it becomes a sustainable model is to be seen. I mean, we do have some virtual brands that we've put into operation in the recent past, and we'd like to think that we're learning along the way. Now, there are some operators out there who've been able to build portfolios of purely virtual brands in conjunction with some of the dark kitchen operators. And they're clearly doing well. I mean, they've been able to build those businesses with a very minimal investment relative to what building a bricks and mortar store would be. So I think yes, there's the answer. They are definitely a new model that will be around for the long term. If you consider some of the operators like Kitopi, who have started in this and have very quickly figured out what works and what isn't, and are continually modifying their operating model to do what's really important, which is provide great quality food to consumers. I think that they're going to be a force to be reckoned with, and I subscribe to the view that there's an opportunity to partner with innovators like that, and try to see whether or not it's beneficial for both. We'll continue to put our primary emphasis on our core brands, because that's what we've invested significantly in. And the only thing that we're really conscious of is any work we do on virtual brands needs to be accretive, not cannibalistic in what we're already doing. But yeah, I think that they'll be around for some time yet.
Thanks, Andy. One of the questions from Will Adwarka, he says that despite the fact that the crisis is global for our industry, local behaviours are very different. Do we think that the UAE or KSA will experience a much higher return of customers than in Europe or China? I'm thinking for Tapan, perhaps you could give us your, obviously you've been speaking with franchisees in China as well. What's the response like been there, and how different do you think that will be to this region?
So what we've learned from China and also South Korea to an extent is that when the lockdown started being eased, people generally bounced back out onto the streets. They just started filling up restaurants. But then it went on for a while and then it subsided. But having said that, China and South Korea's story may not necessarily repeat here. I mean, for example, UAE, we've seen how the number of cases have increased here, and equally in Saudi Arabia. 10 days ago, the number of positive cases were nowhere near today's number. So it is not easy to predict how the behavior will play out once COVID-19 is over. But I have no doubt everyone will be will want to know how good a restaurant is with its hygiene practices. And there'll be some sense of social distancing prevalent even in dine-in areas. And I think Mert alluded to that. And so it just remains to be seen exactly how it will pan out. But I agree, this is not an immediate fix. It'll continue. And if we really want to go back to how people behaved pre-COVID-19, we may have to wait a year at least.
Yes, obviously that's similar to what Mert was saying. Now, moving on to one of the top concerns that Ali raised in the data was rent negotiations. So a couple of people have asked in the question, so I wanted to bring this up with Mert. And what, in your opinion, is what can be done and what would you recommend for people in terms of focusing on the rent negotiation at the moment?
I think, first of all, the landlord needs to understand, and I'm glad to say that from our experience, most of them, they do understand that we are in the same boat. I mean, they're not going to make money, and if we die, and we're not going to make money if they don't support. So we need to have a platform of communication. This is the first advice I would give. I mean, I would sit down and talk to them one by one. If you're a larger operator, you can do it more organized. If you're a smaller operator, you do it in an individual basis. And there are two topics to discuss about, actually maybe three. One, how can we stop the payments during the closure periods? Two, how can we defer the payments through an extended period of time, which should be somewhere around 6 to 12 months, to be frank. And three, how to deal with rent when things start opening up, because obviously this is not going to go back to where it was before. So if you're paying a basic rent or a fixed rent, you will be suffering for an extended period of time, even when this opens up. From our experience, I can tell that majority of the landlords are open to discuss these topics. And obviously they themselves are waiting regulatory, attention on this topic as well. But I think we're gonna have to work together on this.
A couple of questions that are quite similar that we've had is in terms of once this reopens, obviously things will be very different in terms of, for example, social distancing. Anoop Gopal asks, what is the future of restaurants in terms of layout and seatings post-COVID? There are rumours that capacity will have to be reduced by half. Will this mean restaurants need to take bigger space? How much do you think an implementation like social distance could change things? I'll throw that out to anyone who'd like to ask.
I think if I can just start by, sorry, Andy, by one topic, because this is something we have been discussing internally as a team as well. Will this be a permanent thing that we're not going to be able to sit together, etc. I personally don't think it will be a permanent thing. I think it's going to be a period of social distancing limitations going forward. Yet I think, if we can imagine that we'll still be flying with seats next to us or going to cinemas and sitting next to each other, I don't think that this will be a permanent change. Sorry.
I agree. I think that but right now there's a fear factor, and what's driving that is uncertainty. Obviously, the perception right now is that the moment you step outside, you're assailed by a virus, and you're going to be sort of toxic for a long period of time when you come into contact with anyone. At the point that there is a vaccine developed, if and when treatment opportunities are developed, which people feel confident, like any kind of illness, it'll again remove some of those concerns. So short term, yes, people may well be kind of stuck with the advice that's been given to this point, which is obviously sensible. But no, a bit like an elastic band, human nature will kick back in, and the things that are important about being in the hospitality, sharing good times with people, sitting and being collegiate, they'll come back. It'll just take time.
Just to sort of stay on that topic with you, Andy, Kumar Santani asks, obviously that's further down the line you're talking about, right at the moment, what can we do to give peace of mind to customers that they won't get the virus through packaging and such like, how can we get that education across?
Well, I think, I mean, the education side of things is a combined effort. I mean, the government have one responsibility to enforce whatever rules that they think are appropriate in line with, practical health advice. Consumers will ultimately make a call when they go somewhere. If they don't like the way that the operator has set themselves up, then they won't go in. And if an operator doesn't adjust quickly to what consumers are saying, then they won't get them. From a practical standpoint, I think clearly people will want to be reassured that the staff who are making their food and delivering their food have followed procedures. So operators, it's going to be important that we become very obvious in doing those things, with gloves, with masks, with communication either on the packaging or included with the packaging to demonstrate that it's been handled properly. Working with the aggregators who are responsible for delivering our food to make sure that they're also doing those things. As and when people start coming back to restaurants, for the making sure that customers have access to things that they may not have brought with them, sanitizer and masks if necessary, and gloves. I think some of those things we can do, but the education, reducing the fear and transitioning from this period of I'm definitely going to get sick to what do I do to make sure that I'm healthy. I think that will just people will adjust over time, and fairly quickly, I think.
Thanks, Andy.
Can I come in for a second?
Please, Alan.
Sorry, just a quick one. The presentation is already posted on my LinkedIn page. There are lots of questions about where they can get it, but Jennifer will also send a link of the survey through to all the people who have registered on the panel. I also intend to repeat it, the same survey in June, to see if there is a change in sentiment. So that will also be posted when at the appropriate time. Over to you back, Simon.
Thanks, Ali. Yes, as I said, lots of people requesting to see the data because it is so fantastic, and unfortunately we didn't have the time to quite get through it all. But yes, please pursue it at your own, peruse it at your own leisure on Ali's LinkedIn. Let's try and squeeze in a couple of final questions. One from Cohen Thunis. He's asked, perhaps we can bring Tapan back in on this. In terms of what your opinion is on the current leasing system, Cohen believes that it is broken and has been broken for some time. Is it time to go to a revenue-based lease model that is more sustainable and fair to all parties?
Simon, are you referring to the current system of rental?
Yes, rent, sorry.
Yes. Although obviously, see, the revenue share is always the best way of paying rent. Obviously, provided the revenue share percent makes sense. See, end of the day, landlord needs to survive and the operator needs to survive. And I think the most equitable relationship can only be revenue share, where the restaurant does well, the landlord does well. And well, the restaurant does not do well, the landlord does not do well. But then the landlord needs to find the ways of making sure that there is traffic into his property. But yeah, and I think sooner the landlords in the region have not taken that on really well. We do have landlords with reasonable revenue share agreements, but the bulk of the landlords are still on. So the system is not fixed. System needs to be fixed. Maybe MERA can do something in this regard. and approach the body of real estate developers and force this issue. But yeah, I think the right thing to do going forward is revenue share.
Well, for sure, and one of the, what you've touched on there in terms of what MERA could do, another question from Willow Dwarka who says, could this crisis lead us to a new form of transparency between landlords and restaurants? Could we form real alliances for negotiations to help to get better deals? Do you think that's something good that could come out of this?
Well, yes, I think if the agreement is revenue share, then there's no question there has to be some transparency, and then the landlord must know what the operator is doing, and vice versa. And so yes, revenue share, actually, the other side of that coin is transparency, and it needs to be there.
Thank you, Tapan. Now we are just over time, so Damien Conway has traditionally come up with the last question, so we're going to ask each of the panellists in order if you could suggest an answer to this. What date do you, I know it's a little bit looking at your crystal ball here, but what date do you think the majority of restaurants in the UAE will reopen? Perhaps Mert, if you can guess there first.
Yeah, I think I briefly mentioned that during my earlier conversation. I think it will start probably in September, the reopening phase. And yet this is very fluid. I mean, I cannot say I'm basing it on a lot of data, etc. It's a lot of discussions and readings, and this is just a guesstimate at this stage, of course.
My assessment will be that a little bit earlier than that. I think that there's two things: reopening, being allowed to open, and customers coming back in volume are two different things. Looking at what's happened in Bahrain and to some degree is being allowed to happen here, I think that the Ramadan period will be normal. I'd like to think that we'll be able to kind of be available to serve customers by Eid.
Tapan?
I think the number of cases being reported on a daily basis is suggesting that there is serious amount of testing going on and serious number of people being identified as positive. And this is probably leading us to a peak scenario, I think, in the next, again, I also don't have that crystal ball, but I think we are looking at maybe a peak in a week, 10 days max. If so, then I think it'll be reasonable to assume that after Eid, malls may, or for Eid, malls may be allowed to open. And of course, people's behaviors will take time to change, but I think we're looking at post-Eid where at least malls start opening and therefore dine-in outlets start to open.
And Ali, as the man with the data, what's your opinion?
I refuse to predict the future.
I saw that one coming, but thought it was worth a try.
No.
Listen, Ali, first and foremost, thank you so much for presenting the data today. As you've seen by the comments, everyone found it extremely insightful and very, very helpful. So thank you so much for that. Thank you to the rest of the panelists for sharing your expert knowledge and opinion. It's much appreciated. So yes, and obviously thanks to the audience. I believe it was a record audience for a MERA webinar tuned in today, so that's fantastic. We hope you gained something helpful out of it. I'll now pass you over to Jennifer Pettinger-Haynes, who will round off today's session and let you know what more is coming up from you. Thank you very much.
Thank you.
Thank you so much, and thank you, Ali, and to all our panelists. We really appreciate you guys giving up your time and insights. I think judging from all the questions and from all the comments, people really find it valuable. Just to give you a bit of an update on what's happening with MERA, I'm delighted to say that we have had the DIFC give preliminary approval for us to be established as a not-for-profit organization, which is very exciting. So that's kind of our first hurdle. It's still only preliminary approval, but it's something. So we're very pleased about that. And then secondly, I would ask all the operators out there who have been in touch with us and responded to say that they're in. We will be sending you through a letter today that has been drafted asking for support for the industry from the Executive Council. We are trying to get as many signatures on this as possible, and we're going out specifically to operators. So please do keep an eye out for that. And if you are keen to support, please get back to us as soon as possible, as with Ramadan fast approaching, we would like to get it in this week. So if you have any questions or you would like to be included on that, please drop me an email at jennifer@themera.org, or just, a lot of you have my email address, so feel free to reach out. And then finally, next week, we have a hotly anticipated session. Samantha Wood is kindly working very hard with Simon as well to try and get the aggregators on board. We've been reaching out, hoping that we can have a constructive conversation and bring them to the table to answer some of these questions that are coming through for them. So that will be next week's webinar. And then finally, last little bit of housekeeping, we will be sending out an email with the webinar recording from today, with Ali's slides, and also asking you to subscribe to the MERA and GRIF updates. That way we can keep you informed. We've had a lot of people asking how they can get regular updates and be informed of the activities and webinars that are coming up. So please do subscribe to that, and that way we can keep you on our mailing list. So thank you, everybody. Thank you, panelists, Ali and Simon, and we'll be in touch, and we'll see you back here next week. Stay safe.
Thank you.
Thank you.